Well, Angela, thank you so much for joining. Where are you coming in from?
I'm dialing in from New York City, right here in the heart of Lincoln Center.
We're on opposite ends of the island, but
We are.
obviously we're so thrilled to welcome you to the team and to be working together. And maybe can you start just with your background, like your career arc leading up to Fifth Wall?
My career has been quite interesting, and it started from tech banking and a ton of time in the commercial real estate space. And it feels like now it's coming full circle, which is really exciting from my standpoint. So I started in tech banking at Merrill Lynch as an intern while I was studying management information systems at the University of Texas at Austin. And then the tech bubble burst while I was in college. And I said, okay, maybe I need to think a little bit broadly about how I can get more exposure to the financial world. And then I moved into the financial institutions group at Merrill Lynch. When I got my first investment banking bonus, I called my dad, who was a residential real estate broker, and I said, I want to buy an investment property. And in that process, I became a landlord at 22 years old. During the day, I was working on these insurance financial models and asset managers. But what really excited me was when I got home, even though I was exhausted, I was an analyst, by the way, I still spent a lot of time on my little, very simple DCF models for my little real estate portfolio. And I said, maybe this could be a real job. And I transitioned over to the Global Principal Investments Group at Merrill. I ended up meeting the principals at what was then RLJ Development, a boutique real estate private equity firm focused on hotels. And so they brought me over and they said, look, come join us. We'll teach you the ins and outs of owning hotels. I went to Harvard Business School where a lot of the principals had gotten their MBAs, and it was a fantastic experience. While I was doing my summer internship, I went to Europe with MacArthur Glen. And my specific project that summer was to think through ways to incorporate renewable energy sources into their development. And then the world kind of fell apart a little bit. That was the summer of 2008. And I really understood how market context really impacts your investment strategy. I reached out to the principals at RLJ, begged them to take me back, but it was kind of my trial by fire experience in investor relations. I realized I really liked that side of the business. I really enjoyed interacting with the investors, being a thought partner to the investor. I transitioned a bit and I worked with some very large, reputable global private equity firms who are looking to scale their newer real estate platforms. I was both kind of a strategic partner in terms of helping them build out those businesses, but also thinking through ways to not only raise capital from different types of investors, but to think through new product development that actually provided a solution to what the investors were trying to solve within their portfolios. And now I'm here at Fifth Wall and really, really excited about the opportunity of interacting with more investors and making sure investors across the world know what it is and how special the proposition is that Fifth Wall has to offer.
Broadly, like when did real estate technology become something that was relevant to what you were doing?
Maybe 5 years ago when you guys started the company, it was kind of this just cool thing that people did. And it was more viewed as a cost center, probably more than anything. But I think as we've progressed in this cycle, more and more real estate players are thinking about how to differentiate their portfolios. And by the way, with the dislocation and disruption that has ensued post COVID-19, this is the way to basically reposition your portfolios in the face of disruption. I think the real estate players now know this is what they need to adopt technology to help them get through this period of time and make their portfolios quite resilient as the market dynamics continue to change in the future.
And I think what we haven't seen yet is the major allocators to those real estate organizations, to those REITs and public or private real estate companies, also make their own internal allocations to Proptech. But I think we're probably at the beginning of a cycle where real estate technology and Proptech becomes an increasingly important part for allocating to broadly all real estate capital markets for any allocator.
Mhm.
How do you think they should be thinking about that?
It's a great question. And that's one that I'm here to try to help solve, because I think the fundamental, I don't say problem, but conundrum here is that a lot of these very large allocators are in a position where preservation of capital is key. Interest rates have come down. We're in a probably lower returning environment as related to real estate. So they're trying to think about how to position their portfolios for the future. And so it's just a matter of understanding, one, what's the investable universe in this space? Two, will they get rewarded and compensated for what is perceived to be the risk in this space? And three, it's true from a bucketing standpoint, where does this actually fit? Which team actually does the underwriting? And how do you then ensure that you're taking into consideration all of the stakeholders within your system of, whatever your approval process is, and ensure that everyone understands what we are pursuing within the context of Proptech. And so I think that eventually there should be a pure allocation to Proptech. This is the wave of the future. This is the way that your portfolios are going to be able to weather any additional market, dynamics and conditions that materialize, any kind of disruptions that materialize, whether it be something similar to another health pandemic, whether that be climate change. There's a lot of uncertainty out there, but technology can actually provide solutions to address these concerns. And I think it's imperative that many of these capital allocators actually understand and are educated about what it is that Proptech can provide for their portfolios and what exposure to Proptech can provide in terms of the diversification across their investment portfolio generally.
And another interesting dynamic is this collision between what is today called real estate tech or Proptech and climate tech. How do you think large real estate capital allocators should be thinking about allocating to climate tech, which again feels like a departure from the traditional things you do, which is allocating to real estate debt and equity?
It's a question on the forefront of pretty much every capital allocator's mind. It's not necessarily just an altruistic objective, it's a risk objective as well, a risk mitigation objective. And I think getting their heads around the groups and the technologies that can actually facilitate this bridge to net zero carbon emissions through technology is the way that they should be thinking about it. And I think that it is the responsibility of these organizations to think through where they can actually allocate, de-risk that allocation in terms of the risk profile. So looking at groups who have de-risked, I think from a venture standpoint, Fifth Wall's model is quite compelling because you have the corporate allocators, the corporate partners here. They're the ones who are asking for the technologies. You are able to source the startups that have the highest probability of being successful in terms of mitigating these various existential risks as related to climate change. You then have developed a filtering system, a process to diligence these various startups who have the highest probability of being successful. And then I think what's also compelling about the model is your distribution capabilities. So you actually have the ability to help scale these businesses where they'll actually make an impact. And at the end of the day, what this is doing is identifying ways to generate repeatable alpha, which this model has proven that it can do.
The world is making this transition into, Proptech being one of the most important categories of real estate. What excites you most about kind of helping, a firm like Fifth Wall navigate that and get exposure to some of these large investors into the sector?
I think what you've demonstrated so far in a very short period of time is that the model works and we can have a true impact on this industry that I absolutely love. There have been early adopters, but a lot of the industry has been kicking and screaming, but they're coming. And I like this idea of actually being part of the solution. That's a problem that's addressing the largest contributors to some of the problems within as related to climate change, but in terms of the actual size of the market. I think that scaling this business is going to be a lot of fun. And I think that a lot of institutional investors, once they realize what you are doing in terms of providing real solutions, they're going to see Fifth Wall as a thought partner. And at the end of the day, the investment management business is all about trust. And I think once many of these allocators understand that Fifth Wall is a true fiduciary, is really identifying ways to help grow their portfolios, they're going to be long-term partners. And we're going to grow and it's going to be exciting and we're going to do it very thoughtfully. And I'm really looking forward to being part of that trajectory.
Angela, we are so thrilled to have you and, just excited to get started working together.
Thank you so much, Brendan. I'm really excited to be here and I can't wait to get started. Let's do this.